here. Glad you're here. So, some of your thoughts. I mean, we did have the Nvidia conference last week. What was the takeaway?
Yeah, so three big takeaways for me. Nvidia, obviously a huge part and underpins the AI trade. Jensen obviously was super bullish. We got a roadmap with Rubin and what's coming with Blackwell Ultra. So they painted a really strong picture, starting to give us visibility now into that roadmap, becoming a platform company. So they've really got to start to share some of that visibility with their partners about what's coming. So
do you think Nvidia is a winner, I mean, from here, or were we left with a lot of questions?
Absolutely. I think they were positive and bullish on what they were doing around language models, the entire software stack with NIM and with CUDA. They also painted a vision for AI factories. Jensen's talking about these intelligence factories, reimagining how the landscape's going to look for data center. So really bullish. It's becoming the Woodstock of the AI landscape and really starting to mature. And we'll talk about this, about some of the partners that were there, but really becoming that place where everybody goes to make a launch, make an announcement about AI.
I think there's been so much investment with AI there. I saw one article that said even Mark Zuckerberg didn't realize how much they were spending on AI. I mean, like, you know, it's just each company comes out, they have the quarterly reports, and the CapEx spend for AI is huge. And you have names like Oracle and HP, Dell, Lenovo. You're following a lot of names. Your thoughts on AI and the AI trade? Is that still going? Should people still be investing in AI?
Well, Jensen paints this picture of $1 trillion market, for AI, and I believe in that. The trajectory we're seeing, we're still really early, Nicole. I think if you think of where we are in the internet type of landscape, this is 1999. Think of where we were in mobile. We're in 2007. We've been talking about AI solidly for the last 18 months. If you look at the public cloud, AWS is 19 years into that journey. We're 18 months, 2 years into the AI journey. So we're still really early, and there's still a lot of runway to go.
Are we worried about, DeepSeek and how that may have fitted? I mean, a lot of folks I've had on that were in the tech space said it certainly spooked the market for a short time, but it showed that everybody can move together and that, nothing really changes.
Well, I think the thing I took away from DeepSeek was we're going to see these new reasoning models. Jensen was also really bullish on what's happening with inference rather than training. So that's a huge part of it. I think we're going to see these announcements come out. I think what was unique for me about the DeepSeek was some of the claims they made around how much it costs to train their models. I think as the community was able to dig into that, we were able to debunk a lot of those claims and get behind that picture. So I think we're now past that, and I think a lot of people are bullish and continue to be bullish, and rightly so, about where we are on that AI trade.
From the beginning of 2023, just after ChatGPT was released, to its most recent peak, Nvidia's stock more than tenfold increased, making it the biggest success story of the artificial intelligence, AI era to yet. A few months ago, Nvidia's market value reached nearly $4 trillion, and it currently stands at about $3 trillion. No other business in the stock market's history has amassed as much wealth so rapidly. Unsurprisingly, investors continue to keep a close eye on Nvidia. Some are interested in whether the stock can continue to rise, while others are looking for reassurance that their windfall gains won't abruptly vanish in a stock market downturn. Nvidia's stock has already lost some of those gains, down 23% as of March 19th from its January peak due to a combination of slowing revenue growth, waning business and consumer mood, and some skepticism regarding the long-term demand for AI. Nvidia is currently the cheapest it has been since 2019, though, as a result of that downturn, potentially creating a buying opportunity. Is it time to buy Nvidia? Let's examine what the business might be planning for the remainder of the year. If there was one thing to learn from Nvidia's recent annual GTC conference, which was largely centered on AI, it was that the corporation had no plans to sit back and enjoy its success. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Engineering degree, I would be a better partner to you. And I regret that.
Well, I regret that you aren't a better partner to me. I think.
I missed you.
I got some laughs
I was
here.
up at Dave.
I get it. Listen, you could also use back to Nvidia. I know.
Well,
we
I mean,
come back
that's
to it all the
Nvidia
time. What is it trading at? It's trading at about 20 times.
26
right?
times using. I'm going to use Ben Wright. Just to Ben. By the way, Ben, you saw who they like. They like Ben.
They like Ben. Okay.
They like Danoff, Will Danoff from Contra.
Like Will Danoff from Fidelity. Yeah. Well, why wouldn't they?
Why? Because he's the best there is.
Well, also, yeah, he's an important
he's the best
shareholder.
there is, you know.
So when you're saying they like, what you saw a certain dynamic there in terms of Nvidia and either the analysts or those or their investors, they treat them differently? What are you talking about?
No, it has to do with intellectual firepower meets knowledge.
Okay.
You need both. And they think that Ben has tremendous knowledge.
Oh, well, that's good to know.
Like others too, but I'm just saying
we bring him on all the time, so that's a nice thing to know.
Well, I think that's probably right to do.
Because that may be of value to our viewing audience then.
He's a holistic approach.
Right.
They like that too.
All right. You changed it from, though, a discussion of the multiple on Nvidia to some of the analysts and investors they like. Let's get back to the multiple here. I mean, to back to what Mike Wilson was saying. By the way, I thought he was retiring or something. He's still around, huh?
No. Saganegi retired. I miss him.
The most notable change here is Mag 7 earnings revisions look to be stabilizing, potentially bottoming.
Well, because they suck.
This could halt
these
the
have been some of the
underperformance
worst
of these
stocks.
mega cap stocks. So,
the stocks have been horrible.
I hold up Nvidia as an example. We talk about $1 trillion, of which conceivably they'll take an awful lot in 2028, given they don't seem to have any real challengers at this point.
No, I mean, there's no one near them. I visited a facility, data center.
Yeah.
We won't be more deep than that yet. And you just get the sense there's Nvidia, and then everyone else is a distant 2, 3, 4, like nowhere. Broadcom's in the mix, by the way, and Marvell's in the mix, but they're not at the. They're moons. They're moons. I'm talking suns. It is a sun. Mm-hmm. People have to stay focused on that. Okay, so Jensen says, Jensen wants you.
Yes.
We're going to be renting robots 2-3 years. And I met the robots.
Yes.
Very well behaved. And they'll clean your dishes and they'll do the beds. And they're ready. They're ready to be here. And it's going to be his robots because they're human size. Their faces are little
You talked
blank.
a lot about this, obviously,
this
last week.
This is what people talk about. No, this is what people talk about.
Doing the dishes,
the renting of robots.
Which appeals to everybody. So we'll lease our robots. We won't just buy them outright?
Okay, so Jensen says we'll be leasing. They're almost, the fellow who's in charge of robots made it very clear to me. It's a lease. It's not an owner.
And when China's making the cheapest robots, we're still not going to be able to buy them here.
No, but their robots may not look like humans the way that Musk do. Musk robots have unbelievable tactiles.
Well, they continue to try to improve that because that was the most difficult thing. You can remember when we showed them now with eggs and what they're able to do.
Oh, they're like, but what struck me was that NVIDIA's, look, these are not 20, it's not like when nuclear power or quantum, none of those.
Right.
It's like, the future's now, David.
You feel like this is real.
Yeah.
I asked you that last week, though, because we sat at this desk and talked about the future of autonomous cars 7 or 8 years ago being here within a matter of a couple of years, and here we still are.
But that's caught up in regulation. We all know that they're safer already than humans because humans have defects that... I mean, look, humans break dishes. These guys don't break dishes. I'm not talking about that. Humans obviously have problems with drinking.
If your robot breaks a dish, can you punish your robot? Send it to its room?
No, that's too Severance-like. That won't happen.
There they are. There are some robots doing some.
No, that's not. Those are the human-like. Give me the ones with the faces that are just like us.
Wait, there's ones that actually have faces.
One of them has Michigan going all the way.
The company's product roadmap, which includes upcoming chip platforms like Rubin and Feynman, was presented by CEO Jensen Huang during the conference. Huang also highlighted AI projections, one of which indicated that data center capital expenditures will reach $1 trillion by 2028. Additionally, the business revealed new alliances, like as one to develop driverless cars with General Motors. The corporation also announced plans to establish an accelerated quantum computing research center, which would give it a foothold in a new technology that some believe has the potential to be just as significant as artificial intelligence. In order to ensure that its processors and components continue to match the needs of its major clients, Nvidia also announced new alliances with cloud hyperscalers Oracle, Microsoft, and Alphabet. Additionally, it unveiled a multi-year plan to demonstrate to investors that it will keep pushing the boundaries of artificial intelligence. Huang informed the GTC audience, for instance, that Rubin, The company's upcoming GPU generation, which is scheduled for release in late 2026, would power a supercomputer that is 14 times more powerful and uses less electricity than its present counterpart. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Political concerns about the Chinese having advanced chips when we tried to get them not to, but then also on the cost side, there are constantly these questions about if they're just if they can build a better mousetrap to do it cheaper, and what that ultimately means for these capex valuations that we've seen for some of these chip makers here. Does this change anything?
Well, actually, right now, I would consider the Chinese chips to be more at the lower end of the Hopper range. If you look at the previous generation of the Nvidia chips, Jensen went on stage last week and announced almost jokingly with his sales team right in the front there, not to buy Hopper chips anymore because the advanced Hopper chips and now the Blackwell chips are here. So I think China is definitely offering some chips, but still a generation or two behind. But I think if you turn to NVIDIA and the demand issue, I know that's been weighing on the street's concerns for NVIDIA. Here's what I would say. People need to start looking less at the training side of using these chips, the demand side, and now look at the inference side. That is, when you use the model, when you as a consumer, when you as a business use these large language models, we're going to see multiples of demand of what we see now when you use the reasoning models. I'm sure our viewers here are familiar with the O1 models and other reasoning models from OpenAI. They're familiar with the DeepSeek R1 model. These reasoning models need 150 times the compute as the previous quick, just getting an answer model, very simple answers model. So you're talking about not only demand increasing on the training side, I would recommend that we really look on the usage side in terms of using these reasoning models. We're going to see continued demand. I would say, as a watcher of the space, we're going to continue to see. I think the sell-off NVIDIA is a bit overblown, and I think people need to start seeing Blackwell have not only good production numbers, which Jensen announced last week that they got over their production hurdles, you may have heard, but also the demand numbers. And what we're seeing from the top 4 cloud providers, just top 4 CSPs, is 3.6 million GPU demand on Blackwell. So I think the street was right to kind of take a quick look at what exactly is going to be the demand curve. But I do think, given the rise of the reasoning models, we're going to see increased demand.
What have I added to recently? Microsoft.
Nvidia has some concerns unique to the company and the sector, such as the requirement that AI expenditures keep rising. But there are also macroeconomic considerations that have affected the price and made some investors wary. The semiconductor business is cyclical, and Nvidia's stock has experienced significant declines during multiple economic cycles. Investors should be aware of that risk, but it does not imply that the AI boom is coming to an end. Although the company has already had to adjust to export limits to China, so the trade war isn't a completely new problem, tariffs still pose a risk to it. Although it might be affecting the price, the macro uncertainty doesn't seem to be having an effect on Nvidia's business, as evidenced by the company's 78% revenue growth in the fourth quarter and its optimistic first quarter forecast. The expansion of the company may be impacted by a recession or a slowing economy. Nonetheless, its largest clients are all well-capitalized tech firms, which means they have the means to keep investing in AI. Additionally, they think that investing too little on the new technology is riskier than spending too much. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Microsoft, Nvidia, to me, attractively priced mega cap tech. I'm not jumping into the high momentum names. I'll leave that for the experts on the panel who do that. But I think that you're just one headline away. This is what you were saying a second ago, or at least asking, Scott. You know, you're always one headline away from this market turning down, and with it, the higher beta names will go down. So if I want to be invested and not worry about what the next headline is, I want to be in the juggernauts that right now, to me, are really attractively priced. Bryn mentioned Nvidia. I mean, the PEG ratio is around 0.5.
Why don't you buy more? I mean, I've got people making moves.
I did not that long ago. I'm fully invested right now.
No, I know, but Cantor Fitzgerald today says, don't be forced to live in regret. Buy Nvidia. It's our top pick. They say we 100% understand the near-term setup and the macro geopolitical risks that are pressuring that stock. But this short-sightedness has resulted in the name trading at 16 times calendar year 26 earnings power, which is too great an opportunity to ignore. We believe when we look back, this too will be viewed as one of these key inflection points. You must agree because you bought more of it at $117.
Yeah, actually, I went back into it. If you recall, I was on the show. I sold it when earnings came out at about the 130, 131 level. So got back into it. Look, the growth is there. Why I sold it was basically everybody loved it. Everybody still loves it, but now at a lower price, so I'm comfortable there. So it's a trading market. Now, there are some positions that I don't sell out of, that I don't cut back, that I periodically add to as we go on. Because the way I look at it, Scott, is that I love what I own, so I buy what I love. I'm not looking to, leave monogamy with my portfolio and stretch into other areas. The exception one we'll talk to later, which I think could be a long-term hold. So, yeah, there's a lot of beta in it. I like beta because I can manage the risk. And I like these companies because they are insulated from the economy. I take a different view of the direction of the economy than Jim does because I do see the economy weakening.
Bryn, what about this Cantor note for your Nvidia as well? Is it going to be short-sighted to not look at this today and buy it? And will you have regret if you don't?
I think so. I think if it's in your wheelhouse, I think you're going to see the value guys. I mean, Jim, you would say you're Gartby, right? You want to buy good companies, make money. We bought more at 111. I just think it's right in front of you. It's right there. This is a great company. I have not heard one hyperscaler, whether you're in the US, China, wherever, that is cutting back on the spend, and you're going to get more investment. I mean, think about just what SoftBank is doing or what they've promised to do. This has a long runway. And I don't care if it's popular or not, the company itself is getting stronger and stronger from an earnings. They're competing against themselves. They're coming out with another Blackwell. And so it's like, I don't understand how the competitors are keeping up when they're competing and cannibalizing their own products with new products. It's really just ingenious. So I think this is a durable company. It's cheaper than Apple. It's got much higher margins, revenue, and earnings growth than probably any company of this size. And so I think it's a wonderful time to own this stock. This is when you want to own it, when people are kind of unsure about it. Once they're sure about it, the stock will not be at 122, it'll be at 160.
Yeah.
Like you mentioned, Nvidia trading higher, about 3.5% after you had its GTC conference last week. And of course, the lack of tariffs also helping.
Six, we saw Nvidia up close and personal last week, and I was actually blown away. I believe in the earnings. In fact, I think the AI infrastructure spending will only get stronger when they roll out new chips next year. Cheap. Now, I am concerned about this death cross thing, a pattern where the 50-day moving average slices through the 200-day, signaling a real breakdown. I wouldn't normally mind, but there's so many double inverse NVIDIA ETFs and zero-day options. And those have the power to be the tail that wags the dog sometimes. That is worrisome. We need to see this thing break out of that whole death cross.
Although it's impossible to forecast a stock's performance with precision, Nvidia's firm is expected to have another successful year in 2025, despite the fact that the stock market as a whole is being affected by macro-level issues. Demand for the new Blackwell platform, which is currently in full production, is exceeding supply, and the company is still aggressively expanding its business, forming partnerships, and launching additional products. As the year progresses, expect to see more collaborations and product developments from Nvidia. The general outlook for Nvidia is positive, and the stock is selling at a good value after the recent pullback, even though investors may be keeping an eye on certain obstacles the firm faces, such as the impact of DeepSeek.
Mr. Kevin Green, taking a look at the charts, KG, should we start plotting out a path higher?
Well, for today, we could continue to see a move higher. And then I would say, there's a little bit of a dynamics that have kind of shifted today, Oliver, that, makes it a lot more bullish for the market just overall here. But if you're kind of looking at what we kind of highlighted this morning, that 57.65 area as being that potential area of resistance, we're basically testing that right now. Now, could we see another 10 points, 15 points to the upside? That is definitely possible. 57.75, 57.80 have been hitting the flows and hitting the wires here over the last 2 hours or so. So that is definitely in the realm of possibility. And just given the risk on nature that you're looking at for Russell, NASDAQ 100, and seeing pretty much every sector, actually every sector is in the green right now, there is some bullish sentiment taking place. Now, the biggest risk that you're going to have is market on close order. Do we see a sell imbalance because of all of this aggressive buying? Could that create a little bit of a fade? That might be the case here. But overall, the market is pushing a little bit more bullish rather than bearish. And then also kind of if you're looking at premiums, you are starting to see call side skew kind of reigniting back into the market. There's around a 6-point skew to the call side. If you're looking at the money calls, so that's around a 0.1% implied move greater to the upside than downside. That's really good. That means that you are starting to see this unwinding of bearishness in the market. And so once again, the dynamics have kind of changed. We'll talk about that for a little bit later here, but we're looking good. And then hopefully we can break through 57.65. I mean, it's going to be an area of resistance. If we do, another 10 points, 15 points to the upside in the next 30 minutes.
Okay. So we're starting to push up against some pretty high pressure areas that if it goes Bull's way, I guess could get folks to kind of pile on a little bit.
Yeah. And so, let's kind of talk about that. So if we can kind of go through the daily chart, we talked about it this morning, where could be a potential short zone. And we're at that level right now. You're above the 200-day moving average, which is sitting at around 57.52. So if we close above that, we close above the 200-day. You would expect maybe some of those buyers that kind of got in at the lows at 5,500, maybe unwinding some positions. Then there may be some short sellers kind of getting in. You're also above that 20-day moving average, but you do have breadth expanding, RSI making new highs, making higher lows, MACD crossing that bull cross that we kind of talked about here. But the reason why I say the dynamics have shifted, President Trump just had, I'll call it a press conference, if you will, about 30 minutes ago, and the tone shift has changed when it comes to tariffs. You can tell that by his demeanor just in general. Does not sound like we're going to see this broad-based tariff policy that's going to be put on day one here. That could be because of implementation issues, which most likely probably is. The other case could be maybe concessions from a lot of these countries, which kind of seems a little bit far off because we would probably have heard them by now. But I think the wild card that we have here, and I know this doesn't talk about flows, but we have to keep this in mind. The wild card is going to be the whole Venezuela aspect. It's definitely going towards China. And so if he is trying to increase tariffs by another 20, 25%, you're talking about a 45% tariff on China goods. Which would be monumental, but the market's really discounting that. They're not even taking that into account right now, which I find very, very interesting here. The other reason why I say the dynamics have shifted a little bit, let's look at the VVIX chart. VVIX, vol of vol.
Yeah, Mazzola pointed that out to us this morning. That's a really good one.
Yeah. Vol of vol is now at the lowest level that we've seen since July of last year. A tremendous unwind of volatility. Now, there's two things to kind of note there. Massive unwind when it comes to volatility, meaning that the market's really not pricing in upside vol skew or a VIX spike, if you will. That's one thing. So this is bullish. That being said, we get to one extreme and come pretty much to another extreme, as we're seeing on this chart. Volatility is actually relatively cheap now. So if you are concerned about the next 2 months, 3 months, next week or 2 weeks, downside protection is actually really, really cheap. And even if you're looking at the money straddle right now, you're pricing in a very low implied move for the S&P 500 for the remainder of this week. This is also another big game changer, that volatility index. If you're looking at VVIX, also that backwardation is now kind of rolled off. We're in a normalization, kind of at the normal skew. If you're looking at VIX minus the VIX future here, something that you probably wouldn't see if we were going to lead up to another significant pullback in the market. Now, if that does kind of shift and we do see prices going up and vol starts to creep up again, VIX higher, S&P 500 higher, that might be an indication that something's on the horizon. But that VVIX crush is something that I haven't actually seen VVIX crush like this in a very long time. Yeah. Even when we had this, the yen carry trade situation, that blowout that we had to the upside for VVIX itself, I mean, the way that it came down was aggressive, but not as aggressive on a relative basis or on a percent change basis like we just saw over the last 2 days, 3 days.
Yeah, I really like that chart because it's something that we talked about here just in terms of trying to figure out how to trade the last week and then coming into this one. The idea of shorting vol versus long stocks kind of seemed to favor the former. We talked about that with Jason Coogan at Simplex, where the two often go together, but really to get vol to come down, all you really had to root for was just the market stabilizing. If you ramp up, even better. And it seems like that's what's happening here, is that we're letting out this massive sigh of relief that the stuff we priced in at VVIX 130, VIX 30 was not a black swan. This was just a fast correction like Sam Stovall told us about. I mean, it was fast, though.
It was. I'm still not going to be in that all clear camp. I know that you might.
Sure.
And
no, I'm not. I didn't say I'm all clear. I'm not saying all clear at all. That's exactly what I didn't say at the top of the show. I don't think we're all clear. What I think is that we have reset and that the black swan stuff has moved to the side for a moment. So now the volatility resets. You can make some more reasonable bets, right? You've got a wider array of bets now you can make with vol cheaper.
Yeah, well, vol eventually would come down regardless, right? It actually kind of took a little bit longer than maybe we had expected, but now we're starting to see it roll off. I think the options expiration on Friday also helped out with that. I mean, we had a lot of positioning, $4.4 trillion worth of options premium being rolled off here. Seasonally, well, once again, vol usually crushes right after that. So I just go back and just say, mechanically, vol should be a little bit lower. The dynamics and tone shift from the leader of the country right now seems to be a little bit different. I think if you were to get something that could actually reaccelerate volatility to the upside, I think it's the China angle and maybe the Iran angle, but most likely the China tariff angle, which I think the market is not pricing in that at all. And you're kind of looking at a situation too where like high yield credit spreads actually might be breaking significantly to the downside. We kind of talk about this correlation.
Yeah, you got a chart for that, right?
Yeah, high yield credit spreads, when we look at it on the platform, it's usually a day behind. So we have to be mindful of that.
Okay.
But I would not be surprised if you see a massive crush to the downside when it comes to high yield credit spreads, just in general, keeping up with that trend with volatility crushing to the downside as well. That also gives you a little bit of confidence. That means that liquidity is also kind of coming back into the market across different asset classes. Liquidity in the E-mini S&P 500 also looking pretty decent. If I eyeballed it, you're looking at probably around 30 to 35 contracts on the bid and ask. Ali, we were literally sitting at about 8.5 contracts a week ago. So there's a lot internally that has actually adjusted here. I still say counter trend rally for now. Let's see what happens. But the environment looks a lot better than even what we saw on Friday.
Absolutely.